So I spent months marking supply and demands, watching price just slice through my supplies and demands like it was nothing, and asking myself what was happening, only to figure out mm, after months and years of trial and error that I was just not in line with market structure. And if you're struggling with the same thing, it's probably because you're making the exact same mistakes that I was making. And I boiled it down to just three steps that you can actually like just actually check and actually see that if you can fix these things within your strategy, you can actually get better, hopefully. But it has helped me though. Okay, so point one, the first thing I had to realize was that I had to stop reading patterns and actually start reading power. And what I mean by that is actually that I had to realize that not every like supply and demand zone that I mark is just a supply and demand zone. What I'm looking for is that tug of war between buyers and sellers to see who is stronger, and which is why I say that you look at it more like an auction so that you can actually see who is currently winning at the current time, because we are not investors, at least not me. I'm not an investor. Let me not say we and involve you guys. I'm not an investor, so I actually don't need to be looking too too far into the future. I just want to see who's strong now if I'm going to enter now, you know? So, yeah, that's the first point. Okay, so I think I actually just gave away the second point during the first point, but the second point is stop trading history and start trading current price. So I figured that I don't need to be looking at too far into the future. You need to kind of look at current price, kind of like what is happening right now, because that's where the traps are getting laid. That's where the structure is. Because if you're looking at market structure from years ago, it doesn't really help you. You just want to know who's currently stronger right now, and there are more advanced ways to help you get that edge of a higher time frame view, which is what helps you get that edge of like getting a broader view of the markets, if you get what I'm saying. But you're still looking at current price. Even on that daily time frame, you're looking at current price. And on the lower time frames, you're also looking at current price as well. So yeah. Okay, so point three, I had to realize that I had to ditch the 2D view of looking at the markets just from one time frame, or like just scattering the time frames and having a more structured multiple time frame approach. And I say structured intentionally because if it does not have structure, if you're just using every time frame, I don't really advocate for using every time frame. I say just use the time frames that you use. For right now, I'm kind of like going through a little scalping phase, so I'm using the 1 minute, the for my entries, my confirmation, and then my 15 minute for like the structure that I'm trading currently, and then the 4 hour for the overall view, and then the weekly just to get like an overall view. So that's just me, man. Yeah, and the biggest shift for me has just been really understanding that I'm not just looking at a pattern, that I'm actually like really understanding the relationship between buyers and sellers instead of just like answering, and actually seeing these things work in real time has really just been like really crazy. Not saying that I've had any crazy success, but I've just seen that from the trader that I used to be, I've really grown a lot. That's giving myself props right there. So yeah, man, just tell me if there's anything that has helped you with your market structure journey and your supply and demand journey, because I'm probably going to do a video on probably liquidity next, because I think that's the next important thing, is understanding the traps and everything behind like what happens. So yeah, drop a comment down below and I'll see you next time.